Owning a retail business can be incredibly rewarding, but it also comes with its share of challenges. One of the most daunting problems that many retailers face is tax debt. Whether it's due to a misunderstanding of tax laws, poor bookkeeping, or simply not having enough funds to pay what's owed, tax debt can quickly spiral into a financial burden. But the good news is that there are ways to handle it effectively. In this video, we'll walk you through 10 effective strategies to deal with tax debt in the retail industry so you can get back on track and avoid costly mistakes. 1. Stay organized with your finances. The first step in addressing tax debt is to have a clear understanding of your financial situation. This means maintaining accurate records of all your business income, expenses, and tax filings. By staying organized, you can avoid errors and miscalculations that might lead to tax debt in the first place. 2. Don't ignore the problem. Ignoring tax debt is one of the worst things you can do. The longer you wait, the more penalties and interest will accumulate. It's essential to acknowledge the debt and take immediate steps to address it before it worsens. 3. Seek professional help. A qualified tax professional can be your best ally when dealing with tax debt. Tax attorneys or accountants specializing in retail businesses can provide valuable advice on how to navigate the complexities of tax laws, negotiate with the IRS, and possibly reduce the amount owed. Consider an installment agreement. If you're unable to pay your tax debt in full, an installment agreement might be a good option. The IRS offers payment plans that allow you to pay off your debt in smaller, more manageable amounts over time. This can help prevent penalties from escalating and keep your business in good standing. 5. Explore offer and compromise. For some retailers, an offer and compromise, OIC, might be an option. This is an agreement with the IRS where they settle your debt for less than the full amount. However, this is only available under certain circumstances, such as if you can prove that you are unable to pay the full debt. 6. Prioritize your debts. If your business is facing multiple debts, it's important to prioritize your tax debt. Focusing on tax obligations first can help avoid severe penalties and possible legal action. In many cases, businesses can negotiate with creditors to make arrangements for other types of debt while handling tax issues. 7. Take advantage of penalty abatement. If your tax debt is due to reasonable cause, such as natural disasters, serious illness, or first-time errors, you may be eligible for penalty abatement. This allows you to reduce or eliminate certain penalties, making your tax debt more manageable. 8. Consider bankruptcy as a last resort. In extreme cases, bankruptcy may provide a way to address overwhelming tax debt. Chapter 11 bankruptcy, for example, allows businesses to restructure their debt and continue operating. However, bankruptcy should always be a last resort and considered only after consulting with a legal professional. 9. Maintain open communication with the IRS. Keeping an open line of communication with the IRS is crucial. If you're unable to meet a deadline or make a payment, it's important to contact them immediately. The IRS may be willing to work with you to make alternative arrangements if you are proactive in reaching out. 10. Focus on future tax compliance. Finally, once you've resolved your tax debt, it's important to ensure that your future tax filings are accurate and timely. This will help you avoid falling into tax debt again. Set up proper accounting systems and ensure that your business stays compliant with tax laws moving forward. In conclusion, dealing with tax debt in the retail industry doesn't have to be overwhelming. With the right strategies and professional guidance, you can resolve your debt and protect your business. If you found this video helpful, be sure to like, comment, and subscribe for more valuable tips on managing your retail business.